are live. Hey guys, welcome back to the stream. It's 4:30 in the morning here. I woke up like half an hour ago. I had my morning tea and I'm ready to do some reading. Are you guys ready? Okay, so yesterday we read about fractional reserve banking, right? We talked about fractional reserve banking, and so that was till chapter 5. So this is chapter 6, and this one is about English Revolution. Let me get a new site. Okay. Yeah, this one is about English Revolution and the rise of the Rothschilds. The Rothschilds are family. They are like traditionally been bankers from England and all over the Europe actually. I mean, I think they have started in England. We'll discuss about this. Yeah, we'll discuss about their rise in detail in today's stream. Okay, no, nope, nope. Yeah, I'm still okay. So the historical context of the English Revolution. The English Revolution was a series of political upheavals and civil wars in England. Saria Ali, hi Saria. Today we are reading this book. So it's about the history, financial history, and the evolution of money. Hey, Ilo, what's up, man? But stream at 6, please. Ilo, I tried, bro. I tried. By the time I come back, it'll be like late and I'll be tired, man. That's the reason. So I miss streams. I know. But anyway, I'm not doing the gaming streams now, right? I'm doing book reading streams now. Beluga fan first, like, hey, welcome, bro, welcome. Yeah, I'm supposed to be sleeping. It's okay. You know what? Sleep early and wake up early. That's also good. I woke up. I actually woke up now only, like half an hour ago. It's good to have a habit of waking up early and going to sleep at night. I don't care. I'm loyal. No, don't be loyal. No, sleep. Tomorrow you have class, right? Wait, tomorrow you don't have class. It's Saturday, right? It's 1 a.m. for me, lol. Oh, for you, huh? Okay, wait. Let me guess where you are from then. 1 a.m. for you, then you must be at Middle East somewhere, huh? Sorry, Ali. For me, it's 4:30 a.m. Ilo also from here. 4 a.m. here. No, it's 4:37. Ilo, why? What are you saying? But we have to support you, bud. Thanks, bro. Thank you, sis. Ilo, it's 4:37, right? Yeah. I woke up at 4 actually, 4 o'clock. Same thing, huh? No, it's not same. I mean, kind of. Yeah. And wait, Saria, but like, what about you? Like, you didn't wake up at 1, right? You're doing late night, huh? It's fine. It's Friday night, huh, for you. It's Friday night, right? Yeah. Okay. Yeah, Ilo. So regarding the timing, I tried, bro. I tried even the first day when I started, right? I was like, okay, for sure I'll do a stream. I even said that during the morning stream. So you're saying you should be famous. No, I am actually. I am famous. I am very famous. So this is my new channel. Ilo, talk about my old channel, man. No, I'm very famous actually. No, I'm more famous than this channel. That's what I meant to say. Like in my other channel, I do like gaming streams, right? I'm new. Nah, it's fine. It's fine. No, in this stream is like mostly about variety content, and gotta go. Stream 6 or 8 p.m. Please buy. Ilo, don't go. You're gonna sleep now. I no no sleep, bro. Sleep. It's fine. Yeah, yeah. Bye, Ilo. I'll see you, man. I'll see you. Yeah. Yeah, so gaming streams I used to do a lot last year. I started, and then I didn't have the motivation to play games anymore. So I thought I'll do more things, variety content. So I made this channel, and in this right now we are doing book reading. So this is one of my book, and I'm like planning to read 3 books by the end of this quarter. So this is the second book we're gonna read, and finally there is a book about crypto. Okay, so let's get to it. Huh? Yeah, so we are reading about English Revolution. Okay, the English Revolution was a series of political upheavals and civil wars in England that occurred from mid 17th to early 18th century. The revolution was characterized by a struggle for power between the monarchy, parliament, and the people. It was marked by significant changes in the political, social, and economic structures of England, including the rise of capitalism, the development of constitutional monarchy, and the emergence of modern parliamentary democracy. The revolution began in 1640s when the tensions between King Charles I and Parliament over issues such as taxation and religion led to armed conflict. The conflict culminated in the execution of the king in 1649 and the establishment of a republican government known as the Commonwealth of England. This period was marked by radical political and religious reforms, including the abolition of monarchy and the House of the Lords, and the establishment of a Puritan government. The revolution ended in 1688 with the Glorious Revolution, which saw the overthrow of King James II and the establishment of a constitutional monarchy. This period marked a significant shift in power from the monarchy to the parliament and the people. The revolution also paved the way for the development of capitalism and the rise of the banking industry, which played a significant role in England's economic growth and global dominance in the 18th and 19th centuries. The revolution's impact on England's political and economic structures continued to be felt today. Yeah, not just in England, right? Like in everywhere. I mean, India especially. Like India was part of the Commonwealth, so obviously the impact of English Civil War on the economy. Oh yeah, wait, I forgot. I forgot about the glasses. Okay, Saria is asking what book are you reading? I am reading this book. Can you see it? The Capital Game. So it's a book I've written. It's about the evolution of the modern financial system. It's more like historical facts and how money and the modern system which we are using evolved, and who are the uh, it looks kind of cool. Oh, you mean the cover? Yeah, the cover is made by AI. So this whole book, right? The whole book I like self-published it, and like editing and most of the things I've done like using AI. So okay, so the second subtopic is the impact of the English Civil War on the economy. The English Civil War was a major turning point in English history, and it had a significant impact on the economy of the country. During the war, trade and commerce suffered greatly as many businesses were disrupted and some even closed down. This was particularly true in the southern parts of the country, where many of the major trading centers were located. Furthermore, the war had a profound impact on the currency of the England. The King's Mint in Oxford produced coins with a lower silver content than those of the Royalists, leading to inflation and a significant devaluation of the currency. So this part, right? We've read about this part. So this is exactly what happened during the Roman. So we, which chapter was it? I think it was chapter 3, right? The Yeah, Roman Empire and issuance of currency, chapter 3. So the same thing where uh, the king reduced the gold content in the coins and increased the supply of the currency. So same devaluation of currency. And understand the concept, because even though today we are not using any precious metals like gold or silver in our currency, but the devaluation and increasing the money supply is happening even today. So you will understand. No, we need to find parallels between these two concepts. Okay, this in turn made it harder for people to conduct business and further disrupted the economy. The war also led to significant changes in land ownership and tenancy. Many landlords lost their estates as they sided with the losing royalists, and their land was given to those who supported parliament. This shift in land ownership had a long lasting impact on the structure of English society and its economy. Overall, the English Civil War resulted in a significant disruption of the economy of the land, and its impact was felt for many years after the war ended. The establishment of the Bank of England and its function. Yeah, Bank of England, bro. Like the Bank of England. So before that, the central bank was there, I think, and now Bank of England, it's gonna be like part of the system, the government system, right? Yeah, and the structure and the practices and the system which been established during that time are still being followed today, in like almost 1999, I won't say 99, 95%. Because there are some countries like which follow different systems. Yeah. The Bank of England was founded in 1694 during the reign of King William III and Queen Mary II. Its establishment was a response to the financial crisis faced by the English government during the 9 Years' War with France. The government needed to raise funds for the war effort. Yeah, my shit, bro. My photic. I forgot the name, bro. I forgot the name again. Now, photic sneeze reflex, right? There should be a proper sneeze reflex. Yeah, I don't know what I'm saying, right? So I, even when I start stream used to stream before, right? I always find that whenever I'm streaming, my nose get congested, and it becomes difficult for me to breathe, and I sneeze a lot. I didn't know what it was. Then like eventually I kind of knew like the light was the problem, because I always sit in the same room, and without, when I'm not streaming, I don't need the lights, right? The floodlights which are here. So when the light is there, so apparently having like high intensity light exposed to the eye will like cause some, I don't know, some, what does it say? Yeah, causes people to sneeze when they are exposed to light. It's also known as autosomal dominant compelling helio ophthalmic outburst. Yeah, I'm not gonna say that, bro. I'm gonna say that. Oh wait, there is a. Oh wait, there is an acronym for that. Achu. Oh, Achu is like similar to sneeze, right? Okay, I can. I mean, I can see that they have tried very hard to come up with the name so that they can make it a, acronym Achu for sneezing. Nice. Yeah. Anyway, like light causing sneeze and congestion. Like congestion is the problem. Sneezing is still fine, right? Like I, after some time I won't be able to breathe properly. Then like my voice also goes. Yeah, it was. Then yesterday I realized we can use a sunglass, but I have to read, right? Again, it will be difficult. Yeah, I thought of finding the sunglass. I have a Ray-Ban somewhere. I didn't find it. It's fine. No, no, I was like, with sunglass, it will be difficult to read. If I'm just maybe playing games and all, it'll be fine, but for reading, it won't be. So then I left the idea alone. Okay, where were we? 9 Years war we discussed. Yeah, the government needed to raise funds for war effort but was struggling to do so due to high interest rates and lack of credit. The Bank of England was created as a solution to this problem and was granted a monopoly on the issuance of banknotes. The Bank of England's main function was to provide a secure and stable currency for the country. as well as to lend money to the government. It acted as a central bank, holding the government's deposits and managing the national debt. The bank also played a key role in regulating the country's financial system, setting interest rates and controlling the money supply. One of the bank's most significant functions was the issuance of banknotes. Even today, right? Even today, central banks like even Federal Reserve in US and our Reserve Bank of India, like in India, those are the examples of central banks, and they have like the monopoly of issuing banknotes. And the debt actually they have a role. I mean, not directly, but indirectly they have a role in regulating the debt and even stabilizing the currency supply. Uh, the bank also played a key role in regulating the country's financial system, setting interest rate even today, and controlling the money supply even today. One of the most one of the bank's most significant functions was the issuance of banknotes, which became widely accepted form of currency in England. This helped to increase the availability of credit and stimulate economic growth. The Bank of England's role in stabilizing the currency and managing the national debt helped to establish England as a leading economic power in Europe. Today, the Bank of England continues to play a central role in the UK's financial system, acting as a government's banker and regulating the country's financial institutions. Its main responsibilities include setting monetary policy, maintaining financial stability, and promoting the safety and soundness of the financial system. The role of the Rothschilds in the rise of modern banking. The Rothschild family is widely recognized as one of the most influential banking dynasties in history, playing a pivotal role in the rise of modern banking during the 19th century. The family began their banking activities in Frankfurt, Germany in the late 18th century, and eventually, okay, you know what, I was wrong. I was like they were from England, no, but they were from Frankfurt, Germany. Then I think they became prominent in England, and from England, they went all other European nations, establishing like central banks. But their origin is from Frankfurt, Germany. I was wrong, and eventually expanded their operations to other European countries, including United Kingdom, where they established a branch in London in 1804. One of the most significant contributions made by the Rothschilds to the world banking was their pioneering approach to international finance. They developed a network of correspondents throughout Europe and established themselves as intermediaries between various governments and their bond markets. This allowed them to finance major government projects such as infrastructure development and military campaigns, and in turn earn significant points. Hey, Gino. Hey, Gastriz, what's up, man? Good evening, bro. Good evening. What's up? For me, it's good morning anyway. How's life, bro? How's wife and kids? The Rothschilds also. That's good. How about you? Yeah, for me also same, man. Same. I just like woke up half an hour ago. I mean now like almost 45 minutes ago, and I'm going at it, bro. Reading the books. Ilo was here. You can see the chat, right? Yeah, Ilo was here actually. Wait, you can't see the chat, huh? Chat is being covered by this. How to remove it? No, still the chat is not completely visible. Anyway, Ilo was here. He just came and said hi. Like it's Friday night, right? For you it's Friday evening. Yeah, for him it's like Friday, Saturday early morning. He didn't sleep yet, and he just came, said hi, and I think he went to sleep. Yeah, he didn't say anything. Okay, the Rothschilds. The Rothschilds. The Rothschilds also played a crucial role in the development of the stock market. They were among the first to recognize the potential of rail investments and actively participated in funding and construction of railways across Europe. Their expertise in finance and investments enabled them to accumulate vast wealth and influence in the political and social spheres. Furthermore, the Rothschilds were instrumental in growth and expansion of the Bank of England, acting as one of the largest borrowers and playing a key role in shaping its policies. They also established their own banking institutions, which became major players in the international financial markets. Overall, the Rothschilds were central figures in the rise of modern banking, and their legacy continues to be felt in the world of finance today. The connection between Rothschilds and the Napoleonic Wars. The Rothschilds played a significant role in financing the Napoleonic Wars, which were fought from 1803 to 1815 between France and a coalition of European powers. The Rothschild family had established themselves as one of the wealthiest and most influential banking families in Europe by the early 19th century. Their network of banks and financial connections made them ideal partners for governments in need of funding for their military campaigns. The Rothschilds were particularly active during the Napoleonic Wars, providing loans to various European governments and playing a key role in the British government's financing of the war effort. Nathan Rothschild, the head of the London branch of the Rothschild banking family, became especially well known for his financial acumen during this time and was instrumental in providing British government with the funds it needed to wage war against Napoleon. In addition to their financial contributions, the Rothschilds also had a significant impact on the diplomatic efforts of the European powers during the Napoleonic Wars. They maintained close relationship with many of the key political figures of the time, including British Prime Minister William Pitt, Austrian Foreign Minister Prince Metternich, and were able to use their influence to help shape the course of the conflict. Overall, the Rothschilds' involvement in the Napoleonic Wars cemented their reputation as one of the most powerful banking families in Europe and helped to establish the modern system of international finance that we know today. The rise of industrialization and the impact on banking. The Industrial Revolution marked a significant turning point in the history of banking. As industrialization transformed the economy, the need for financing increased, and banking institutions were forced to adapt to meet the new demands of business and consumers. The rise of manufacturing and commerce created a need for a larger and more complex financial instruments, leading to the development of new banking services such as commercial lending and investment banking. The expansion of industry also led to an increase in the demand for credit, as factories and other businesses required large sums of capital to invest in new technologies and expand their operations. Banks stepped in to provide loans to support these ventures. With the growth of manufacturing, banks also began to issue loans based on the potential earnings of companies rather than just the value of their assets. Furthermore, industrialization led to the creation of new industries and the growth of existing ones, resulting in the need for specialized banking services. For example, banks began to offer specialized services such as foreign exchange, insurance, and trade finance to support the growing trade. Yeah, my nose, man. It's starting. It's starting. Shit. Yeah, for example, banks began to offer specialized services such as foreign exchange, insurance, trade finance to support the growth of trade between nations. The growth of industrialization also created opportunities for banks to invest in new ventures, leading to the rise of investment banking. Overall, the rise of industrialization had a profound impact on the banking industry, leading to the development of new financial instruments and services and the expansion of credit. As industry continued to grow and evolve, banking institutions adapted to meet the changing needs of the economy and played a critical role in supporting economic growth and development. The expansion of banking networks and their function. The expansion of banking networks refers to the growth and proliferation of banks and other financial institutions across geographical regions and markets. This growth has been facilitated by advancements in technology, transportation, and communication, allowing for faster and more efficient movement of goods, services, and information across borders. As banks expanded their operations, they began to offer a wide range of financial services beyond traditional banking activities like deposit taking and lending. Today, banks provide a diverse array of services such as investment banking, wealth management, insurance, and foreign exchange trading. The function of these expanded banking networks is to facilitate economic activity by providing access to credit, capital, and financial services. Banks act, banks act as intermediaries between savers and borrowers, pooling deposits from savers to lend to borrowers who require capital to invest in projects or expand their businesses. They also provide a range of other services to support economic activity, such as facilitating international trade, financing infrastructure projects, and managing risk through hedging and insurance. The expansion of banking networks also led to greater financial inclusion as more people and businesses have access to financial services. This has been particularly important in emerging markets where access to credit and financial services can be limited, but also in developed economies where access to banking services is essential for everyday life. Overall, the expansion of banking networks has played a significant role in driving economic growth and development, facilitating trade and investment, and improving financial inclusion. The role of Rothschilds in financing government debt. The Rothschilds played a significant role in financing government debt during the 19th century. With the rise of industrialization and the expansion of global trade, governments required large sums of money to fund their activities, particularly during times of war. The Rothschilds, who had established a vast banking network across Europe, were able to provide these funds through the issuance of government bonds. The Rothschilds' success in financing government debt was due to their expertise in underwriting or managing the risk of investing in bonds. They were able to assess the creditworthiness of governments and determine the appropriate interest rates to charge for their bonds. They also had the ability to sell these bonds to a wide network of investors, including other banks, wealthy individuals, and even entire nations. The Rothschilds' involvement in government debt financing was not without controversy. Some critics accused them of monopolizing the bond market and charging excessive interest rates. However, others argued that their expertise and financial resources were critical for governments to be able to raise necessary funds for their activities. Overall, the Rothschilds' role in financing government debt was a significant factor in the growth of modern banking and the expansion of global trade during the 19th century. Their ability to manage risk and mobilize capital allowed them to become one of the most powerful banking families in the world. The legacy of the Rothschilds and their influence on modern banking. The Rothschilds played a significant role in shaping modern banking and finance. Their influence can be seen in many areas of banking, including international finance, investment banking, and government financing. One of the most One of their most significant contributions was the creation of global banking network that allowed them to finance governments and international trade across Europe, the Americas, and Asia. The Rothschilds' success was based on their ability to innovate, adapt to changing market conditions. They were early adopters of a new finance. They were early adopters of new financial technologies such as telegraph, which allowed them to quickly communicate and execute transactions across vast distances. They also pioneered new financial instruments such as government bonds, which enabled them to finance governments and other large scale projects. Their influence extended beyond just banking as they were also active in philanthropy, art, and politics. They supported many charitable causes, including the establishment of hospitals, schools, and museums. They were also prominent in the world of art and amassed one of the world's largest private collections. Today, Rothschild's legacy can be seen in many modern banking practices such as investment banking, global finance, and private banking. Their global banking network and ability to innovate and adapt to changing market conditions have served as a model for many modern banks. Their influence on modern banking is a testament to their lasting impact on the world of finance. The impact of the English Revolution on political and economic systems. The English Revolution, also known as English Civil War, had a profound impact on both political and economic systems in England. The conflict between parliamentarians and royalists resulted in the overthrow of the monarchy and the establishment of the Commonwealth under the leadership of Oliver Cromwell. This shift in political power challenged traditional notions of monarchy and divine right, laying the groundwork for the development of modern democracy. Economically, the English Revolution had both positive and negative impacts. The war had led to significant inflation as the government issued large amounts of paper money to finance the conflict. The establishment of Bank of England in 1694 helped to stabilize the currency and create a more reliable monetary system. The bank also provided the government with a more stable source of funding through the issuance of bonds, which helped to reduce the reliance on taxes loans from wealthy individuals. However, the revolution also resulted in significant social and economic upheaval, particularly for those who had supported the royalist cause. Many wealthy landowners were forced to sell their property to pay for war damages, leading to the consolidation of land ownership and the emergence of a new class of wealthy capitalists. This economic transformation helped to pave the way for the Industrial Revolution, which would transform England into a major economic power. Chapter 7. The Bank of England, the world's first privately owned central bank. And today, all central banks in the world are privately owned. Just want to make a point. The historical context of the establishment of Bank of England. So we are, I think, in this one we are going further in detail on the central bank, which is the Bank of England. I mean, some things will be repeated, but that's fine. The historical context of the establishment of Bank of England dates back to. So you know what? I think I'll rush through this part. We already, you know, except some facts and some things in detail, we already discussed about this. So the historical context of establishment of Bank of England dates back to late 17th century in England. At that time, England was a rising colonial power and its government was in need of a reliable source of credit to finance its my nose is itching, man. What the hell? At the time, England was a rising colonial power and its government was in need of a reliable source of credit to finance its military endeavors and colonial expansion. However, the existing banking system was fragmented and unstable, with many private banks issuing their own banknotes without any regulation. This led to a lack of confidence in the banking system and the devaluation of banknotes. To address these issues, a group of merchants and bankers proposed the creation of a national bank that would uh, issue standardized banknotes. I mean, drinking black tea, right? Drinking black tea in like empty stomach is causing burping, man. Burping. I don't know why. To address these issues, a group of merchants and bankers proposed the creation of a national bank that would issue standardized banknotes backed by government securities. After much debate and opposition, the Bank of England was established in 1694 under a royal charter granted by King William III and Queen Mary II. The Bank of England was unique in that it was the first privately owned central bank in the world. Its main purpose was to provide credit to the government and regulate the money supply. It also played a role in stabilizing the banking system by serving as a lender of last resort to other banks during times of financial crisis. Overall, the establishment of Bank of England marked a significant turning point in history of banking and finance, and its legacy continues to be felt today in modern financial system. The political and economic factors that led to the creation of the bank. The establishment of the Bank of England was influenced by several political and economic factors. During the late 17th century, England was facing financial difficulties due to the constant wars with France and the expenses associated with them. The government needed to raise funds to pay for the wars and maintain its creditworthiness. The existing financial institutions, such as goldsmiths and private banks, were not able to provide enough capital for the government's needs, and the system of borrowing from wealthy individuals was not reliable. To address these challenges, a group of merchants and bankers proposed the creation of a new institution that could issue public loans and manage government's finances. The government was initially reluctant to entrust such significant powers to a private entity. However, the idea gained traction due to the support of influential figures such as William Patterson, a Scottish entrepreneur, and John Locke, a philosopher. In 1694, the Bank of England was established with a charter from King William III, granting it exclusive rights to issue banknotes. The bank was allowed to lend money to the government, pay interest on deposits, and act as a clearing house for commercial banks. The bank's capital was raised through subscriptions, with the government being the largest holder. Overall, the creation of the Bank of England was a response to the economic and financial challenges of the time, as well as an attempt to establish a more reliable system for financing the government's operations. The structure and function of the Bank of England. The Bank of England was founded in 1694 to raise money for the government to fund the 9 Years' War against France. It was initially set up as a private bank, but it quickly assumed a public role as the government's banker and later as the issuer of banknotes. The bank's structure and function were unique at the time and served as a model for many central banks that followed. The Bank of England was structured as a joint stock company owned by private shareholders. With a significant government involvement, the bank was governed by a court of directors, which was responsible for setting policy and overseeing day to day operations. The governor and deputy governor were appointed by the court of directors and served as the bank's senior executives. The bank's primary function was to raise funds for the government by selling bonds and managing national debt. It also served as the government's banker, managing its accounts and payments. The bank was also authorized to issue banknotes, which quickly became widely accepted as a convenient means of payment. As the bank grew in size and importance, its functions expanded to including regulating the banking system, providing liquidity to the financial system. It also played a role in stabilizing the currency by managing gold reserves and adjusting interest rates. Overall, the Bank of England's structure and function reflected a unique blend of private enterprise and public responsibility. And its establishment and it established the foundation for modern central banking. The issuance of banknotes and their value. The issuance of banknotes by the Bank of England was a key component of its operation. Banknotes served as a means of exchange and a store of value for individuals and businesses, and they helped facilitate commerce and trade. The Bank of England issued its first banknotes in 1694, and they were initially issued in denominations ranging from £20 to £1,000. The value of banknotes issued by the Bank of England was determined by the amount of gold and silver held in reserve by the bank. The banknotes were fully backed by these reserves, meaning that they could be exchanged for gold or silver at the Bank of England at any time. This helped ensure the banknotes maintained their value over time and that they were widely accepted as a means of payment. The Bank of England also had power to regulate the amount of banknotes in circulation by adjusting the amount of reserves it held. This allowed the bank to control inflation and maintain stability in the value of currency. The Bank of England's ability to issue banknotes and regulate their value helped establish its role as central bank and a key player in the British financial system. So right now they are saying they were like fully reserved, right? Like how much ever banknote it issued, 100% reserves it had in silver and gold. So eventually that will change. Eventually that will change, and the fractional reserve banking in central banks, which we discussed before, right? So that will happen. So in this we are just simply discussing the whole history from the beginning. Now, the relationship between the bank and the British government. The Bank of England's relationship with the British government has been complex and multifaceted since its establishment in 1694. Initially, the bank was established to lend money to the government to finance its wars and to manage the national debt. In return, the bank received a royal charter which gave it a monopoly over the issuance of banknotes in England. Over time, the bank's relationship with the government has evolved, with the bank taking on an increasingly important role in monetary policy and financial stability. Today, the Bank of England operates as an independent institution responsible for maintaining monetary and financial stability in the UK. However, the bank still maintains close ties with the government. The governor of the Bank of England is appointed by the Queen. I mean, now King. I think, yeah, I wrote it like in 22, right? That time it was the Queen. Now it's the King on the recommendation of the Prime Minister. The bank's monetary policy decisions are subject to parliamentary scrutiny. The bank also works closely with the government agencies such as the Treasury and the Financial Conduct Authority to ensure the stability of the financial system. Overall, the relationship between the Bank of England and the British government has been characterized by a delicate balance between independence and cooperation. While the bank operates independently, it also recognizes the importance of working closely with the government to achieve its objectives of maintaining stability in the financial system. The role of Bank of England in financing wars and conflicts. The Bank of England played a significant role in financing wars and conflicts throughout its history. One of the bank's primary functions was to provide credit to the British government, particularly during times of war when the government required significant financial resources. During the 18th century, Bank of England financed a series of wars, including War of Spanish Succession, the War of Austrian Succession, and the Seven Years' War. The bank's support allowed the government to raise necessary funds to pay for troops, supplies, and other war related expenses. In the 19th century, the Bank of England continued to finance wars, including the Napoleonic Wars and the Crimean War. Wait, let me just check the rumble, whether it's live on rumble or not. Rumble, are you ready to rumble? Yeah, it is, right? Yeah, it is. Is it? Yeah, it is. Okay. My nose is itching, man. Why? No, you know what? It starts like this. So the photic sneeze reflex, the achu. I think it's starting, man. I think it's starting. Where were we? Yeah. During 18th century, the Bank of England financed a series of wars. Yeah, we read that. Crimean War. The bank's involvement in these conflicts helped to establish its reputation as a crucial pillar of the British financial system. The bank's role in financing wars and conflicts had a significant impact on its operations and policies. For example, the bank's willingness to lend money to the government during times of war contributed to the development of a close relationship between the bank and the British Treasury. This relationship in turn helped to strengthen the bank's role as a central institution in the British financial system. The impact of the Bank of England on global financial system. The establishment of Bank of England in 1694 marked a significant turning point in the global financial system. It was the first central bank to be established in the world, and its influence extended far beyond the British Isles. The bank played a critical role in the development of the international monetary system, serving as a model for other central banks. Serving as a model for other central banks that were established in Europe and North America in the following centuries. The bank's influence was particularly significant during the 19th century, a period of rapid economic growth and globalization. The bank helped to stabilize financial markets during times of crisis and facilitated the expansion of international trade through its role in the issuance and management of currency. The bank also played a key role in the development of gold standard, which became the foundation of international monetary system during 19th and early 20th century until 1913. Like even in US it was there. Then they completely removed it, right? Like even though till then it was there as like fractional reserve, like how much of a currency they are issuing, fraction of that will be in the as a reserve in gold, but that they completely removed it and made it fiat. That's yeah, we'll discuss this further. We'll discuss it further. I'm just like making notes as it comes to my mind. The bank's influence was particularly significant during the 19th century, a period of rapid economic growth and globalization. The bank helped to stabilize financial markets during times of crisis and facilitated the expansion of international trade through its role in the issuance and management of currency. The bank also played a key role in the development of the gold standard, which became the foundation of the international monetary system during the 19th and early 20th centuries. The Bank of England's influence on the global financial system can still be seen today. Central banks around the world continue to look to the Bank of England as a model for effective monetary policy and financial regulation. The bank also remains a significant player in the international financial markets, and its decisions continue to impact the global economy. Overall, the Bank of England's establishment had a profound impact on the development of global financial system and laid the foundation for modern central banking. The evolution of central banking in Europe and North America. The establishment of the Bank of England in 1694 marked the beginning of a modern central banking. Central banks were later established in Europe and North America, with the Swedish Riksbank being the oldest, founded in 1668. In the early 19th century, several European countries established central banks, including the Banque de France. Banque de France. It's a French word, I'm not going to say it. In 1800, and the Deutsche Bundesbank in 1957. In the United States, Federal Reserve System was established in 1913 in response to the financial panics of the late 19th and early 20th centuries. Central banks have evolved over time, with their roles and functions expanding beyond their original mandate of maintaining the stability of the currency and financial system. Central banks now play a key role in regulating the banking system, managing yeah, central banks now play a key role in regulating the banking system, managing the interest rates, and providing liquidity during financial crisis. In Europe, the establishment of European Central Bank (ECB) in 1998 marked a significant step towards economic and monetary union. The ECB, European Central Bank, is responsible for monetary policy in the Eurozone and is the sole issuer of euro banknotes. In recent years, central banks have faced new challenges such as the rise of digital currencies, increasing financial interconnectedness, and the need to address climate change. As a result, central banks are evolving to meet these challenges and maintain the stability of the global financial system. The influence of the Bank of England on the rise of capitalism. The Bank of England played a significant role in the rise of capitalism in the 18th century by providing a stable and reliable source for credit to businesses and entrepreneurs. The Bank of England helped to fuel economic growth and development. One of the key ways in which Bank of England supported the rise of capitalism was through its role as a lender of last resort. This meant that the bank was willing to lend money to banks and other financial institutions during times of crisis, which helped to prevent bank runs and other financial panics. By providing this backstop, the Bank of England helped to maintain confidence in the financial system, which was critical to the success of capitalism. Another way in which the Bank of England supported the rise of capitalism was through its role in promoting sound money. The bank was responsible for setting interest rates and regulating the money supply, which helped to keep inflation in check and maintain the value of the currency. By providing a stable monetary environment, the Bank of England helped to create predictable and reliable economic system that was attractive to investors and entrepreneurs. Overall, the Bank of England played a critical role in the development of capitalism in the 18th century. By providing a stable source of credit, acting as a lender of last resort, and promoting sound money, the bank helped to create the conditions necessary for economic growth and development. The legacy of Bank of England and its impact on modern day banking. The Bank of England had a significant legacy that continues to impact modern day banking. Its establishment as the world's first privately owned central bank marked a crucial turning point in the history of financial institutions. The bank's ability to issue banknotes, regulate commercial banks, and act as a lender of last resort set a precedent that has been adopted by central banks worldwide. One of the bank's most notable legacies is the development of monetary policy as a tool for managing the economy. The bank's control over interest rates and money supply has played a crucial role in stabilizing inflation and promoting economic growth. Central banks worldwide now use these tools to manage their economies. Additionally, the bank's role in financing wars and conflicts established a precedent for central banks to support governments during times of crisis. This has evolved into a common practice where central banks act as a lender of last resort to commercial banks and governments. The bank's influence on the global financial system has also been significant. Its model of a privately owned central bank has been replicated in many countries worldwide. Moreover, its reputation as a stable and reliable institution has made it a hub for international banking and a center for financial innovation. Overall, the Bank of England's legacy has played a crucial role in the development of modern day banking and financial systems. Its establishment and evolution has set a precedent for central banking and monetary policy that has been widely adopted around the world. Okay, so the next chapter, chapter 8, the rise of Rothschilds and their influence. So now we are gonna go a bit more detail on the history of the Rothschilds family. Road trade. Chapter 8: The Rise of Rothschilds and Their Influence. The history and background of the Rothschild family. The Rothschild family is one of the wealthiest and most powerful families in the history of banking and finance. The family's origins date back to 18th century in Frankfurt, Germany, where Mayer Amschel Rothschild established his banking business. Mayer Amschel Rothschild was the founder of the Rothschild dynasty and was highly successful in banking, financing, and trading. He had five sons, who he sent to different parts of Europe to establish their own banking businesses. The five Rothschild brothers, Nathan, James, Amschel, Salomon, and Carl, were highly successful and established banking businesses in London, Paris, Frankfurt, Vienna, Naples, respectively. The Rothschilds became known for their expertise in banking and their ability to manage large scale financial transactions. They were instrumental in financing of wars and the development of the railway system in Europe. They also played a crucial role in the creation of national debt markets, which allowed governments to borrow money from the public. Over time, the Rothschilds became highly influential in politics, and their wealth and power allowed them to play a significant role in shaping the course of European and global history. Despite facing discrimination and prejudice due to their Jewish heritage, the Rothschilds persevered and built an empire that has had a lasting impact on the world of finance and banking. The role of Rothschilds in financing of wars. The Rothschilds played a significant role in financing wars during the 18th and 19th centuries. As a banking family with a vast network of branches across Europe, they were in a unique position to provide funds to the governments and monarchs. One notable example of the Rothschilds' involvement in war financing was during the Napoleonic Wars. They loaned large sums of money to the British government, helping to finance the war effort against France. The Rothschilds also provided financial support to other European countries, including Austria, Prussia, and Russia during this period. In addition to providing loans, the Rothschilds also facilitated the movement of funds between countries. They were able to use their network of banking branches to transfer money quickly and securely, even in times of war. The Rothschilds' role in war financing was not without controversy. Some critics accused them of profiting from war and contributing to the suffering caused by conflict. However, others argue that their loans helped in ensure stability and prevent more destructive conflicts. Overall, the Rothschilds' involvement in war financing played a significant role in shaping European history during this period, and their impact on the global financial system was felt for many years to come. The creation and function of Rothschild's banking network. The Rothschild banking network was created by Mayer Ramschild Rothschild, who established his first banking business in Frankfurt in the late 18th century. He quickly built a reputation as a shrewd financier, and soon expanded his operations, opening branches in major European cities such as Paris, Vienna, London, and Naples. The Rothschilds were unique in that they operated as a family business, with each branch of the family operating independently but working together when necessary to achieve their financial goals. The Rothschild Bank network became known for its innovative and effective financial strategies, including currency exchange, international banking, and investment in government bonds. They were instrumental in developing the bond market and pioneering the issuance of government debt. Their success in these areas allowed them to accumulate vast amounts of wealth and establish themselves as one of the most powerful banking families in Europe. The Rothschilds' reputation for integrity and reliability made them a trusted partner for governments and other institutions seeking to raise capital. They were involved in many large scale financial transactions, including financing of wars and construction of infrastructure projects. Their network of my throat, man. Their network of contacts and business relationships across Europe allowed them to effectively manage the flow of capital between countries and contribute to the growth of international trade and investment. The Rothschilds and the development of international finance. The Rothschilds were instrumental in the development of international finance. They were among the first bankers to establish a global banking network, which helped facilitate trade and investment across borders. The Rothschild Bank were located in major financial centers across Europe, including London, Paris, Frankfurt, and Vienna. One of the key ways the Rothschilds facilitated international finance was through their use of bills of exchange. A bill of exchange is a financial instrument that allows for the transfer of funds from one party to another without the need for physical currency. This made it easier for businesses and investors to engage in international trade and investment as they could use bills of exchange to transfer funds across borders quickly and easily. The Rothschilds also played a significant role in the development of the bond market, which allowed governments and corporations to raise large amounts of capital through the issuance of debt. The Rothschilds helped to establish the market for government bonds in Europe, which allowed the governments to finance wars and other expenditures through the sale of bonds to investors. They also played a key role in the development of corporate bonds, corporate bond markets, which allowed corporations to raise funds for expansion and investment. Overall, the Rothschilds helped to create the infrastructure for modern international finance, which has played a significant role in the growth of the global economy. The role of the Rothschilds in the Industrial Revolution. The Rothschilds played a significant role in the Industrial Revolution, particularly in financing and investing in industries such as textiles, railways, and mining. The Rothschilds used their vast wealth and extensive banking network to invest in emerging industries and support the growth of industrialization of Europe. They also helped to finance the construction of infrastructure necessary for industrialization such as canals and railways. One notable example of the Rothschilds' investment in the Industrial Revolution was their investment in the textile industry. The Rothschilds financed several textile mills in Britain and Europe, providing necessary capital for the purchase of machinery and the expansion of production. They also invested in the transportation and distribution of textiles, helping to make the industry more efficient and profitable. In addition to textiles, the Rothschilds invested in other industries such as mining and railways. They played a significant role in the development of railways in Europe, financing the construction of new lines and investing in railway companies. The Rothschilds' investment in these industries not only helped to fuel the growth of industrialization but also generated significant profits for the family. Overall, the Rothschilds' investment and support of the Industrial Revolution helped to transform the economies of Europe and paved the way for the growth of modern capitalism. The Rothschilds and the creation of national debt markets. The Rothschilds played a crucial role in the creation of national debt markets, which were essential for financing the growth of modern nation states. In the 19th century, governments began to borrow money from private lenders to finance their expenditures, including war, infrastructure projects, and social programs. The Rothschilds, with their extensive banking network and expertise in financial markets, were ideally positioned to help governments issue bonds and manage their debt. One example of the Rothschilds' involvement in national debt markets was their role in financing the British government's war against Napoleon. Nathan Rothschild, the head of the London branch of the family's banking business, used his connections in Europe to purchase British government bonds and sell them to investors across the continent. This helped to ensure the British government had a steady stream of funding for the war effort. The Rothschilds also played a significant role in developing the market for government bonds in Europe. They established relationships with governments across the continent and helped to standardize the terms and conditions of bond issues. This made it easier for investors to compare and evaluate different bonds and increase the liquidity of the market. Overall, the Rothschilds' expertise in finance and their global network of contacts were critical to the development of national debt markets. Their contributions helped to fuel growth of modern nation states and laid the foundation of the modern financial system. The Rothschilds and the influence of Jewish banking families. The Rothschilds were one of the most prominent Jewish banking families in Europe in the 19th century. As Jews were often excluded from other professions and businesses, banking became a key area of opportunity for them to succeed. The Rothschilds were not the only Jewish banking family, but their success and influence made them a symbol of the Jewish community's ability to succeed in the world of finance. The Rothschilds' success challenged traditional notions of Jewish identity and assimilation. While some Jews chose to assimilate into European society and abandon their Jewish heritage, the Rothschilds maintained their Jewish identity and used it to their advantage. They formed connections with other Jewish banking families across Europe and built a network of Jewish bankers who could support each other in business. The Rothschilds also faced anti-Semitic sentiment and their success sometimes fueled anti-Semitic conspiracy theories. Some accused them of manipulating the world events through their banking connections, while others accused them of exploiting their clients and profiting off of war and conflict. Despite these challenges, Rothschild's influence and success paved the way for other Jewish banking families to enter the world of finance and become successful in their own right. Their legacy continues to be felt in the Jewish community and in the world of finance today. The legacy of the Rothschilds on modern day banking and finance. The Rothschilds have had a significant impact on modern day banking and finance. Their innovative techniques and practices have influenced the world in many ways. One of the most significant contributions of the Rothschilds was the creation of the banking network that spanned across Europe. This allowed them to establish a system of international finance, which enabled them to fund large scale projects and provide loans to governments and businesses. The Rothschilds were also known for their expertise in the field of investment banking, particularly in the areas of underwriting and bond issuance. They were able to provide financial support for many large scale infrastructure projects such as construction of railroads and canals. Additionally, the Rothschilds played a key role in the development of the stock market, particularly in London and Paris. They were one of the first banking families to engage in the practice of stock trading and helped to establish the London Stock Exchange. Overall, the Rothschilds' impact on modern day banking and finance is significant. They were instrumental in the development of international finance, investment banking, stock markets, and philanthropy, among other areas. Their legacy continues to be felt today in the world of finance and beyond. The impact of the Rothschilds on European and global politics. The Rothschilds had a significant impact on the European and global politics, particularly in the 19th century. The family's financial power allowed them to have significant influence over governments and political leaders, which they often used to further their own interest. One example of their political influence was during the Congress of Vienna in 1815, where the Rothschilds played a crucial role in financing the anti Napoleonic coalition. Their efforts were recognized by the Austrian emperor, who granted them noble titles, making them the first Jews to receive such an honor in the Habsburg Empire. In addition to their financial influence, the Rothschilds were also active in philanthropic and civic activities, which further cemented their position of power and respect in society. They funded numerous projects and institutions, including hospitals, schools, and museums. The Rothschilds' political influence also extended to the United States, where they were heavily involved in financing the Union during the Civil War. Their support played a significant role in ensuring the Union's victory and helped establish the United States as a dominant global power. Today, the Rothschilds continue to be an influential family in global finance, with many of their descendants holding prominent positions in banking and finance. Their legacy serves as a reminder of the power of wealth and the impact it can have on politics and society. Chapter 9, The American Revolution and the Role of Currency. Okay, so now we are moving away from England and Europe to America, and yeah, further we'll be discussing more and going in detail from the establishment of the United States, then the structures, the financial structures, and eventually we'll discuss, yeah, the second half, right? Yeah, we are almost half. The second half is completely focused on the US and the evolution of financial systems in US particularly. Mm, the historical context of the American Revolution. The American Revolution was a political upheaval that took place from 1765 to 1783, resulting in the separation of 13 British colonies in the North America from the British Empire and the formation of United States of America. America. The origins of the revolution can be traced back to several factors, including the growing tensions between the colonies and the British government over issues such as taxation and representation. Yeah, regarding the taxation, right? It's funny when people are discussing the taxes in US today. So the revolution, right? It started all because British, the British Empire, right, in England, they wanted 1% tax on the American colonies, and they were like, no. That is the start of the revolution. The French and Indian War, 1754-1763, which was fought between British and French over territorial control in North America, also played a significant role in the lead up to the revolution. The war was costly for the British government, and they sought to recover their expenses by imposing new taxes on the colonies. These taxes, yeah, this is what I mean. These taxes include the infamous Stamp Act and Townshend Act, were met with resistance from the colonists who felt that they were being taxed unfairly without representation in the British Parliament. The tensions between the British government and the colonies escalated in the 1770s with events such as the Boston Tea Party and the Coercive Acts, which further limited the colonists' political and economic freedoms. The American Revolution ultimately began with the Battle of the Lexington and Concord in 1775 and concluded with the signing of Treaty of Paris in 1783, which recognized the independence of the United States. The impact of French and Indian War on American colonies. The French and Indian War was a significant conflict between the French and British empires that took place in 1754 and 1763 in North America. The war had a profound impact on the American colonies, particularly in terms of political and economic consequences. The conflict emerged due to the dispute over the control of the Ohio River Valley, which was strategically vital for trade and settlement. The British and their American colonial allies eventually emerged victorious, gaining control of most of the territories. However, the French and Indian War was also costly and it had considerable impact on American colonies. The British government had accumulated a significant amount of debt to finance the war, and it attempted to recoup these costs by imposing taxes on the colonies. This led to growing resentment and a desire for greater independence among colonists, setting the stage for the American Revolution. Moreover, the war also played a significant role in shaping the relationship between Native American tribes and the British and American colonists. The British victory in the war forced many Native American tribes to cede their land to the British and and colonists, leading to the displacement of thousands of Native Americans and exacerbating tensions between them and the colonists. Overall, the French and the Indian War had a profound impact on the American colonies and helped shape the course of American history. History. Next, the creation and function of colonial currency. This is another important thing. Right, we'll go to that. Well, let me just check if the Rumble chat is there or not. Usually, I like forget to see the Rumble chat because like no one usually comes there. Yeah, it's not there. I mean, nobody's there. Rumble chat is quiet. Yeah, the creation and function of colonial currency. In the American colonies prior to the Revolutionary War, there was no unified currency system in place. Instead, the colonies relied on a patchwork of currencies that were often inconsistent in value and not widely accepted across different regions. Each colony had its own currency, which would be exchanged for other currencies at varying rates depending on the location and the type of currency involved. Most colonial currencies were printed on paper bills and were backed by silver and gold reserves. However, the system was not subject to abuse by no, no. However, the system was subject to abuse by colonial governments and financial institutions, which sometimes issued more paper currency than they had reserves to back it up. This led to inflation and loss of confidence in colonial currencies, making it difficult for merchants and other businesses to conduct transactions across colonial borders. Despite these issues, colonial currencies were an important tool for financing colonial governments as well as for stimulating economic growth and trade. They also served as a means of exchange for goods and services, allowing colonists to conduct business more effectively and efficiently. Overall, the creation and function of colonial currency was a crucial factor in the leading up of the Revolutionary War, as it highlighted the need for a unified currency that could better support the need of the growing American economy. Oh wait, I'll just change the topic. Oh wait, I mean, there was no need for me to remove that. Ah, that's fine. American Revolution. Okay. The role of currency in the Revolutionary War. Currency played a crucial role in the Revolutionary War as both the American colonists and British soldiers relied heavily on it for their daily transactions. The British government had prohibited the colonies from printing paper currency, which forced them to rely on British currency that was in short supply. The Continental Congress, formed in 1775, began issuing paper currency to fund the war effort. These paper notes, known as Continentals, were not backed by gold or silver and were easily counterfeited, leading to significant inflation. The lack of a stable currency also made it difficult for the colonists to purchase necessary goods and supplies, and the Continental Army struggled with paying soldiers and acquiring supplies. The British also attempted to undermine the colonists' currency by circulating counterfeit notes and hoarding gold and silver. Despite the challenges posed by currency during the Revolutionary War, the colonies were ultimately successful in securing their independence from Britain. The war played a significant role in the development of American banking and finance, as it led to the establishment of a more stable and unified currency system. It also emphasized the importance of sound monetary policies, and the need for a central bank to regulate the nation's currency. The establishment of the Continental Congress and their monetary policies. The Continental Congress was established in 1774 as a response to the British Parliament's attempt to assert greater control over the American colonies. It served as a governing body of the American colonies during the Revolutionary War. The Congress played a vital role in shaping the economic policies of the colonies during this time, including the creation and management of a national currency. The Continental Congress faced significant financial challenges during the Revolutionary War. The Congress needed to raise money to pay for the war effort, but the colonies had limited financial resources. To address this, Congress turned to printing paper currency known as continental currency. Continental currency initially issued $2 million worth of continental currency in 1775, and by 1779 had issued nearly 241 million. Ooh, inflation, bro. Inflation, devaluation, I mean, yeah, it's all the same. I mean, in theory, in the end, the currency was not backed by gold or silver, which caused it to depreciate rapidly. The Congress attempted to stabilize the currency by passing laws to regulate its circulation and to control prices, but these measures were largely ineffective. Despite the challenges, the Continental Congress was able to use its control over the currency to finance the war effort. The Congress also worked to establish partnerships with foreign powers such as France to secure loans and financial support. However, the excessive printing of continental currency led to high inflation and ultimately contributed to the economic difficulties faced by the newly formed United States after the war. The creation and function of the continental currency. Oh, I'm tired. I'm tired and I'm hungry, man. What the hell? I'm thinking, do I have any snacks? I have some snacks, but it's not good to eat it in like empty stomach, right? I'll have like proper breakfast later. It's fine. The creation and function of the continental currency. The continental currency was created by the Continental Congress during the American Revolution as a means to finance the war effort. The first continental currency notes were issued in 1775 and were in circulation until 1781, when they were ultimately retired due to inflation and counterfeiting. The continental currency was initially backed by the promise of future taxes, but as the war dragged on, the value of the notes began to plummet due to overprinting lactose specie. Wait, specie. It's a new word. No, I know the word, but wait. It's not species, it's specie. Lack of species, not species. No, 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 no. I think it's a typo, huh? It's a typo, I think. Like Google is not showing anything, right? I'm pretty sure it was a typo. The continental currency was initially backed by the promise of future taxes. But as the war dragged on, the value of the notes began to plummet due to our printing, lack of specie, and British counterfeiting. The Continental Congress tried to counteract this inflation by passing laws. Oh, you know what? Let's ask ChatGPT, right? Yeah, Google is of no use. Maybe ChatGPT knows. ChatGPT. What is the meaning of lack of species in the context of continental currency and American Revolution? Okay. In the context of colonial currency and American Revolution, lack of specie refers to the shortage of gold and silver coins. Okay, gold and silver coins were called specie. How is it pronounced, right? Now, why was there a lack of specie? I think yeah, we are hearing that like because of like inflation, British counterfeiting. Okay, so refers to the shortage of gold and silver coins. Lack of specie means silver coins is gold specie. I don't know what's the pronunciation. Species. Got it. The Continental Congress tried to counteract this inflation by passing laws to limit prices and wages. Yeah, it won't work. Yeah, that will never work. So this is every government, like everyone makes this mistake, right? Even though throughout history, it's even today, due to overspending and devaluation, when the prices of commodities increase, the government passes law to control the prices. It won't work. It will never work. But at least, I mean, they have to show something. They are doing something to. It's like very indirect, right? No one will understand it. Why it won't work or why it's happening in the first place. But these measures were largely ineffective. Always throughout history, it was ineffective. One notable feature of the continental currency was the use of different denominations, ranging from one third of the dollar to $80. Ooh. This allowed for greater flexibility in making transactions, but also contributed to confusion and counterfeiting. Overall, the continental currency was not a successful experiment in paper currency for American colonies. It suffered from inflation, counterfeiting, and lack of confidence, and ultimately had to be replaced by the more stable United States dollar after the Revolutionary War. However, it did serve as an important precursor to the modern American monetary system and demonstrated the potential of paper currency as a tool for financing wars and government expenditures. The influence of the continental currency on inflation and economic growth. During the American Revolution, The Continental Congress authorized the creation of continental currency, which was the first paper currency issued by a newly formed United States. However, the continental currency faced significant challenges and ultimately had a negative impact on inflation and economic growth. One major issue with the continental currency was its overprinting, which led to significant inflation. The Continental Congress did not have the ability to levy taxes, so they printed more money to finance the war effort. This caused the value of the currency to rapidly decline, leading to hyperinflation and making it difficult for individuals and businesses to make purchases. In addition to inflation, continental currency also caused economic stagnation as the value of the currency decreased. Foreign, yeah, these terms, right? Stagnation, devaluation, inflation, and so in technical terms, we'll discuss further about the different models and different terms used in that in this book, The Currency Conundrum. As the value of the currency decreased, foreign investors and merchants became hesitant to do business with the United States, which led to decline in international trade. Furthermore, many colonists became hoarders, fearing that the continental currency would continue to lose value, which caused a shortage of currency in circulation and further limited economic activity. The failure of the continental currency highlighted the importance of sound monetary policies and fiscal responsibility in supporting economic growth. It ultimately led to the establishment of a more stable and centralized banking system in the United States, with the creation of the first bank of United States in 1791. Guys, I'll take a break. Huh? I need a pee break. I'll drink some water and I don't know. Let me go and see if I have anything to eat. I don't want to eat. Like if I eat snacks, right? Eating snacks is not good. Like proper breakfast is good, but it's still time. Okay, I'll be back, guys. I'll be back. I'm back, I'm back, I'm back. Uh, where were we? Yeah, the role of foreign powers in financing the American Revolution. During the American Revolution, the colonies faced significant financial difficulties as they lacked the resources to finance their war efforts. As a result, the Continental Congress sought assistance from foreign powers, particularly France and Spain. France provided both military and financial aid, which was crucial to the success of the revolution. In 1778, the United States and France signed the Treaty of Alliance, which provided for a significant loan to the American government. This loan was used to finance the war effort and help to alleviate the financial crisis faced by the colonies. Spain also provided financial support, albeit on a smaller scale. The assistance of foreign powers not only helped to finance the war effort, but also demonstrated the viability of the United States as an independent nation. The willingness of France and Spain to provide aid demonstrated to other nations that the United States was a legitimate and viable entity. This in turn helped to bolster the confidence of investors and contributed to the growth of American financial markets. The support of foreign powers was also critical in securing the victory of American Revolution. The aid provided by France in particular was instrumental in the defeat of the British at the Battle of Yorktown. Without this support, the outcome of the war may have been very difficult, very different. The connection between American Revolution and the birth of American banking. American Revolution played a significant role in the birth of American banking. During the war, the Continental Congress and individuals colonies had to finance the war effort, but they lacked the funds to do so. As a result, they resorted to printing paper money known as continental currency, which quickly led to hyperinflation and loss of confidence in the currency. After the war, the United States government recognized the need for a stable and reliable monetary system. In 1791, the first bank of the United States was chartered by Congress to act as the nation's central bank, with Alexander Hamilton serving as its first director. The bank's purpose was to regulate the money supply, manage government funds, and promote economic growth. The establishment of the first Bank of United States was a significant development in American banking history as it provided a framework for the regulation of the banking system and helped to stabilize the economy. The banking the bank was modeled after the Bank of England and served as a template for future American banks. The birth of American banking can also be traced to the growth of commercial banks, which began to emerge in the late 18th century. These banks were established to provide loans to businesses and individuals, which helped to spur economic growth and development. Overall, the American Revolution was a pivotal moment in the history of American banking as it highlighted the importance of a stable monetary system and provided the impetus for establishment of the first bank of the United States and the growth of commercial banking. The legacy and American Revolution and its impact on modern currency. The American Revolution was a defining moment in the history of United States and had a significant impact on the evolution of currency and banking in the country. The Continental Congress, faced with the challenge of financing the Revolutionary War, created continental currency, the first paper currency issued by the United States government. The currency was intended to finance the war effort, but it rapidly depreciated in value due to the lack of backing and the overprinting of paper money. This led to rampant inflation, making it difficult for soldiers and civilians alike to afford basic necessities. The experience of hyperinflation and the collapse of the continental currency reinforced the idea that a stable currency was necessary for the stable economy. The legacy of the American Revolution on modern day currency is seen in the creation of United States dollar, which replaced the continental currency. The US dollar has become world's leading reserve currency used in international trade and transactions. Additionally, the founding of the first banks in the United States was closely linked to the financing of the revolution. The Bank of North America, founded in 1781, played a vital role in supporting the Continental Army and the government. The establishment of the stable banking system was essential for the growth and development of the United States economy. In conclusion, the American Revolution was a pivotal moment in the evolution of currency and banking in United States. The experiences of hyperinflation and the collapse of the continental currency reinforced the importance of a stable currency of economic growth and stability. The legacy of the revolution is seen in the creation of the US dollar, which has become the world's leading reserve currency, and the establishment of a stable banking system that has supported the growth of the development of the US economy. Chapter 10: The first and second banks of the United States. Yeah, like I said, guys, we are going in deep to the establishment of the current system in US. I mean, we can focus on other countries, right? But given that the significance and influence of the US economic system, that's the reason I chose US economy. It's the biggest economy, the strongest one, the most influence, the importance of dollar, particularly as a currency of in international trade, and its role as a reserve reserve currency. Yeah. Chapter 10: The first and second banks of the United States. The historical context of the establishment of the first bank of the United States. The historical context of the establishment of the first bank of the United States can be traced back to the early years of the American Republic in the aftermath of the Revolutionary War. In the years following the war, the country faced numerous economic challenges, including high levels of debt, inflation, and an unstable currency. At the same time, the government was struggling to establish a functional system of finance and taxation that could support its growing needs. To address these challenges, Treasury Secretary Alexander Hamilton proposed the establishment of a national bank in 1790. The bank would serve as a central repository for government funds, issue currency, and provide loans to the government and private citizens. The bank would also be responsible for regulating the nation's money supply, stabilizing the economy, and promoting economic growth. Despite opposition from some quarters, including many of Hamilton's political opponents, the first Bank of United States was established in 1791. It was chartered for a term of 20 years and was headquartered in Philadelphia. The bank quickly became a critical component of the nation's economic infrastructure, providing stability to the economy and helping to promote the growth of industry and commerce. Its success laid the groundwork and establishment of Second Bank of United States in 1816. Wait, I'll change the heading. First and Second Bank of United States. Guys, the stream is live, right? But I just suddenly got a message that like connection restored. Wait. When did the connection got lost to be restored? But am I live? Hello. I am right. Okay, I think I am. Yeah, I am. Yeah. In Twitch, at least I am. Okay, fine. No, no. Suddenly, I just got a message showing the connection restored. So I was wondering when did the connection got lost to be restored in the first place. Apparently, maybe okay, maybe it's with this whiteboard I'm using. Like in this case, the blackboard I'm using. Maybe in terms of that. Okay, so I don't have to rub it, right? I can just move it aside. Yeah. So we are discussing the first and second banks. The function and structure of the first bank of the United States. The first Bank of the United States was established in 1791 to serve as the central bank of the United States. Its major function was to manage the country's finances and provide a stable currency. The bank was authorized to issue paper currency, accept deposits, and make loans to the federal government and private citizens. It also had the power to regulate state chartered banks. The bank was structured as a not corporation, private corporation with a 20-year charter, and its stock was primarily held by wealthy individuals and foreign investors. The bank was overseen by a board of directors and a president who was appointed by the President of the United States with the approval of the Senate. One of the key features of the bank was its ability to stabilize the currency by controlling the money supply. The bank could adjust interest rates and the amount of money in circulation to prevent inflation or deflation. The bank also helped to fund the federal government by loaning money to the Treasury Department and providing a secure place to store the government's funds. Overall, the first Bank of United States was designed to provide stability to the fledgling American economy and provide a centralized system for managing the country's finances. It served as a model for future central banks and played a significant role in the development of the American banking system. The role of Alexander Hamilton in the creation of the first bank. Alexander Hamilton played a key role in the creation of the first Bank of United States. As the first Secretary of the Treasury under President George Washington, Hamilton was charged with creating a stable financial system for the new country. He believed that a national bank was essential for achieving this goal, as it would provide a central repository for government funds, help to manage national debt, and promote economic growth. Hamilton drafted a plan for the bank and submitted it to the Congress in 1790. The plan called for the creation of a privately owned bank that would be chartered by the federal government and have a 20-year lifespan. The bank would have a capital stock of $10 million, with the federal government holding 20% of the shares. The bank would issue paper money and make loans to the government and private citizens. Hamilton Hamilton's plan was controversial, with some arguing that it exceeded the power granted to the federal government by the Constitution. However, after much debate, Congress approved the plan in 1791, and the first Bank of the United States was established in Philadelphia. Hamilton's role in the creation of the first bank was significant, and he continued to champion the bank's importance throughout his tenure as Secretary of the Treasury. He believed that the bank was essential for the country's economic development and stability, and his vision helped shape the future of American banking. The opposition of the first bank and its closure. The opposition of the first bank of United States was led by Thomas Jefferson and James Madison, who argued that the bank was unconstitutional and represented an overreach of federal power. They believed that the bank would benefit the wealthy and the well connected at the expense of ordinary citizens, and that the powers granted to the bank were not explicitly granted to the Congress in the Constitution. Despite this opposition, the first bank was established in 1791 and began operations in Philadelphia with a 20-year charter. However, its charter was not without controversy. The debate over the constitutionality of the bank continued to be a point of contention in American politics. Like even today, right? Even today, with Federal Reserve, also there are people who discuss these points. Opposition to the ban grew during the presidency of Andrew Jackson, who vetoed the rechartering of the bank in 1832, arguing that it was an instrument of the wealthy and posed a threat to individual liberties. Jackson's veto was upheld and the bank's charter expired in 1836. The closure of the first bank of the United States marked a turning point in American history as it represented a shift away from centralized banking and toward state chartered banks. However, it also left a void in the American financial system that would later be filled by the Second Bank of the United States. Now, the Second Bank of the United States. The Second Bank of the United States was established in 1816 after the charter of the First Bank of the United States had expired and was not renewed. The Second Bank was established with a 20-year charter and was modeled after the First Bank. Like the First Bank, the Second Bank was responsible for regulating national currency and serving as the federal government's fiscal agent. It also had the power to issue banknotes, make loans, and hold deposits. The second bank was headquartered in Philadelphia with branches throughout the country. Its leadership was appointed by the President of the United States and confirmed by the Senate. The bank was initially led by William Jones, who was succeeded by Langdon Sheaves and Nicholas Biddle. The establishment of the second bank was controversial, with many critics arguing that it was unconstitutional and represented an overreach of federal power. Supporters of the second bank included President James Madison and Secretary of the Treasury Alexander Dallas, argued that a central bank was necessary for economic stability and growth. Despite opposition, the second bank played a crucial role in stabilizing the American economy in the aftermath of war in 1812. It issued a stable currency, made loans to businesses and individuals, and helped to finance public infrastructure projects. However, opposition to the bank continued to mount, with many people accusing it of favoring the interests of wealthy elites at the expense of ordinary Americans. The function of the structure of the Second Bank of United States. The Second Bank of the United States was established in 1816 with a 20-year charter. Like the first bank, it was designed to serve as a central bank for the country and was responsible for regulating the nation's money supply and ensuring the stability of the banking system. The bank was authorized to issue banknotes, make loans to the government and to other banks, and collect and manage government funds. The bank structure was similar to the first bank, with a board of directors and a president who was responsible for the day to day operations of the bank. The bank's charter gave it the power to establish branches throughout the country, which allowed it to serve as a financial intermediary between federal government and local banks. The bank was also designed to be financially independent, with its profits being used to support its operations and to pay dividends to its shareholders, which included private investors as well as federal government. This structure was intended to ensure that the bank was able to operate free from political influence and remain financially stable even in times of economic uncertainty. Overall, the Second Bank of the United States played a critical role in stabilizing the nation's financial system and in promoting economic growth. Its establishment marked a major milestone in the development of American banking and finance, and its legacy can still be felt in the modern banking system. The opposition of the second bank and its closure. The second bank of the United States faced opposition from various groups, including state banks, Western farmers, and President Andrew Jackson. One of the primary criticisms against the second bank was that it was an institution that favored wealthy and influential at the expense of the common man. This sentiment was fueled by the fact that the bank was primarily located in eastern states and controlled by a board of directors who were largely from the elite class. Jackson, who had been a vocal critic of the bank during his presidential campaign, vowed to abolish it once he took office. He believed that the bank had too much power and was unconstitutional. In 1832, Jackson vetoed a bill that would have extended the bank's charter, arguing that it was an unnecessary and dangerous monopoly. Despite the bank's effort to secure support from Congress and the public, Jackson's veto marked the beginning of the end for the second bank of the United States. In 1836, the bank's charter expired and was not renewed. The bank's closure caused economic instability and a credit crunch as the state banks rushed to fill the void left by the bank's absence. However, some historians argue that the closure of the bank ultimately paved the way for a more decentralized banking system, which allowed for a greater competition and innovation in the banking industry. The role of the second bank in the growth of the American economy. The second bank of the United States played a significant role in the growth of the American economy during the early 19th century. The bank was established in 1816, 5 years after the closure of the first Bank of United States, and had a similar structure and purpose. The second bank was responsible for regulating the state banks and ensuring a stable currency, promoting economic growth and development. One of the key ways the second bank facilitated economic growth was by providing a reliable source of credit to the country. The bank was able to issue its own currency and provide loans to businesses and individuals, which helped to stimulate economic activity. The bank also acted as a central clearing house for checks, making transactions easier and more efficient. Additionally, the second bank was also involved in several large scale infrastructure projects, including the construction of canals and roads, which helped to further develop the country's transportation network and facilitate trade. Overall, the second bank of the United States played a vital role in promoting economic growth during its existence. Its regulation of the state bank its regulation of the state banks and provision of credit helped to stabilize the economy and encourage investment, while its involvement in infrastructure projects helped to modernize the country and increase economic efficiency. The legacy of the first and second banks of United States in American banking. The legacy of the second and the legacy of the first and second banks of United States is significant in the history of American banking. Both banks served as prototypes for the modern banking system, influencing the development of American banking laws and practices. The first Bank of United States established a model for a central bank, which was later replicated by Second Bank. The creation of these institutions set a precedent for the federal government to be involved in banking and finance rather than leaving it solely to the states. The second bank also introduced the concept of branch banking, which allowed for greater accessibility of banking services for the public. The establishment of these banks also had a significant impact on the stability of the American economy. They helped regulate the money supply, stabilize interest rates, and provide a sound currency which contributed to the economic growth and stability. The second bank, in particular, played a critical role in promoting the expansion of the American economy, funding infrastructure projects, and encouraging investment. Additionally, the debate surrounding the establishment and closure of these banks led to a deeper understanding of the role of banking and finance in American economy and government. This informed the development of banking laws and practices in the United States, which continue to shape banking industry today. In conclusion, the legacy of the first and second bank of United States of America banking United States on American banking is undeniable. These institutions established a framework for a modern banking system, promoted economic stability and growth, and influenced the development of American banking laws and practices. The impact of the banks on American politics and government. The establishment of first and second banks of United States had a significant impact on American politics and government. These institutions were created to address financial needs of the young nation and to promote economic growth. However, their existence was also controversial and their influence on the political landscape of the time cannot be understated. The first bank was established by Alexander Hamilton, a key figure in the early American government, and it was seen as a centralizing force in the country. Its opponents feared that it would grant too much power to the federal government and that it would favor northern commercial interest over the agrarian south. The bank's charter was allowed to expire in 1811, but the War of 1812 highlighted the need for a centralized financial institution, leading to the establishment of the Second Bank in 1816. Second Bank was created with a similar purpose as the first bank, to stabilize the economy and provide a national currency. However, its existence was also a contentious issue, with opponents arguing that it was unconstitutional and that it concentrated too much power in the hands of a few wealthy elites. This led to a bitter political battle, with President Andrew Jackson vetoing the renewal of the bank's charter in 1832. Despite their controversies and eventual closures, the first and second banks of the United States had a lasting impact on American politics and the government. They set a precedent for the role of the federal government in regulating economy. The establishment of importance, the established they set a precedent for the role of federal government in regulating the economy and established the importance of centralized financial institutions in promoting economic growth. Okay, now I'm like in chapter 11, we are discussing further into the uh, like after this, after like Andrew Jackson, in detail, we are discussing Andrew Jackson and the death of the second bank. So, you know what, guys? I think we'll stop here. We'll continue from this chapter 9. No, 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 chapter 9, chapter 11. Yeah, X1 is 11, which is Andrew Jackson and the death of second bank. Fine. We'll continue it tomorrow. And right now we are like almost at halfway to the book. Now, what are the chapters are left? Let me go through the yeah. So Andrew Jackson and the death of the second bank. Then we discuss civil war and the role of bankers. Then we discuss the Jekyll Island and National Monetary Commission. Then the Federal Reserve Act of 1913 and its provisions. Yeah, then the modern from 1913, it becomes the modern system, which is still now, which is still present today. The Federal Reserve and all, and the role of Fed in business cycles. Then World War One and financing. Then Contraction Act and Monopoly of Bankers. The Coinage Act of 1870. Okay, we are again going back to the Coinage Act to discuss further about how the fiat system is being established. The American Bankers Association and William Jennings Bryan, Woodrow Wilson and Income Tax Bill, Federal Reserve and Business Cycle, Evolution of Central Banks, Alternative Money, Alternative Monetary Systems, and the Future of Financial Power and its Impact on Society. So that's the last chapter. So discussing all that, we'll complete the history part of evolution of financial power. Then we come to the second book, which is the Currency Conundrum, which is exploring the complexities of monetary systems. And in this one, we discuss from a theoretical perspective. So, like in history, we discuss, right? Then in theory, how things are evolving, what other alternatives are there, those we discuss in this book. Overview of monetary system, evolution of money, debt money system, bond money system, debt free money system, fractional reserve banking. We go into the details with the jargons and all. So this book is more the technical, right? Then full reserve banking, history of interest and usury, history of income tax and its relation to debt money system, then Milton Friedman's theory on debt money system, then examples of debt-free money systems, then a new economic model, principles and components, gold standard and historical significance, the role of central banks in the economy, inflation and its impact on different monetary system, then cryptocurrency and impact on economy, globalization and its impact on monetary systems, government spending and economic growth, then austerity measures in the times of economic crisis. Yeah, this is a bigger book actually. This is a bigger book than the last one. Then income inequality and its impact on the economy and monetary system, technology and its impact on economy and monetary system, international organizations and their role, then taxation in different economic systems, monetary policy and fiscal policy, social welfare and the economy, private banks and the monetary system, government regulations and their role in shaping the economy, consumer behavior and its impact on the economy, war and its impact, innovation and its impact, demographic changes and its impact on economy, education and its impact, natural resources and their role in shaping economies, globalization and income inequality, limitations of existing monetary system and the need for a new economic model, the principles of new economic model, a median of both extremes, then examples of implementation of new economic models, the benefits and challenges of adopting the new economic model. The conclusion is the currency conundrum resolved through a new economic model. These are like theories, right? Then we finish with that. Then we go into crypto. So in this book, the future is decentralized, which discuss cryptocurrency and blockchain explain, but it's more in terms of like economic things. Even though we go in details about the jargons and technical terms in crypto, we also discuss their influence on the modern economic system. I think towards the end, yeah, towards the end, we discuss that. Yep. So that's how we are gonna do all the streams further. And guys, yeah, I think I'll end the stream today. Hope you all enjoyed the book reading. I'll see you all tomorrow. Bye.